Welcome back to another video, and in this video, I'm going to tell you exactly what I would do if I had to start trading again from absolute zero. After 2 years of experience in the financial markets, after losing money, making mistakes, learning psychology, testing strategies, and finally understanding how trading actually works, I'm now going to share with you the exact roadmap I would personally follow if I were in your place today. And trust me, if somebody had explained trading to me like this, when I first started, I could have saved months of confusion, stress, and a lot of money. So make sure you watch this video till the very end, because I'm going to give you a serious roadmap, and if you follow this properly, your journey can become much faster and much clearer than most beginners. Now, if you are a complete beginner and you know absolutely nothing about trading, then the first thing you need to understand is that trading is not a market. Trading is a skill, and this skill can be used in multiple financial markets. Most beginners jump into trading without even understanding where they are trading. Before learning strategies, before indicators, before signals, the first important decision is choosing which market you actually want to master. There are mainly 3 major financial markets where people trade. First is the stock market, second is the crypto market, and third is the Forex market. During my journey, I explored different markets. I traded in stocks, I traded in crypto, and after experiencing different environments, I slowly realized something very important. Forex gave me the best overall trading experience. And if today I had to restart my journey from zero, I would personally choose Forex from day one. Now let me explain this with a simple example. Imagine you want to open a restaurant. You have 2 choices. One restaurant in a small village with only 10,000 people, and another restaurant in a massive city like Mumbai. Where do you think the growth opportunities are bigger? Obviously Mumbai, because the market is larger, the opportunities are larger, and the money flow is larger. And that is exactly how financial markets work. Some markets are limited, while some markets are massive. Forex is one of the biggest financial markets in the world, with trillions of dollars moving every single day. That means more liquidity, more movement, and more opportunities. Now listen carefully, I'm not saying Forex is easy, because no market is easy. If you don't have discipline, patience, and proper risk management, every market will destroy you. But choosing the right market from the beginning can save you a lot of struggle and confusion. Now once you decide your market, the second important thing is choosing your broker. And beginners seriously underestimate this part. A broker is basically the company that connects your trades to the market. If you want to buy gold, somebody else has to sell gold. The broker becomes the middleman that facilitates this transaction. And this is why choosing the right broker matters so much. Let's say you start trading with $1,000. You lose $50 in trading, but then you also lose extra money in commissions, hidden fees, bad spreads, or broker manipulation. Now, your recovery becomes harder. And even worse, some brokers are complete scams. People spend months growing their accounts only to realize they cannot even withdraw their own money. That is why, before depositing even a single dollar, do your research. Check if the broker is regulated, check reviews, check withdrawal proofs, and check their reputation. Because even if you become the best trader in the world, a bad broker can still destroy your journey. Now, after selecting your broker, you need a trading platform. This is where you will analyze charts and execute your trades. Some of the best trading platforms are MetaTrader 5, CTrader, and TradeLocker. Personally, I mostly use MetaTrader 5 because it is beginner friendly and simple to understand. Now comes the most important phase, learning trading itself. And this is where most beginners make a huge mistake. They try to learn everything. Indicators, 100 strategies, thousands of candlestick patterns, and too many concepts at the same time. Eventually, their brain gets overloaded. I made the same mistake in my journey too. But after 2 years of experience, I realized something shocking. In real trading, you only need a few concepts mastered deeply, not 500 concepts half learned. And according to my experience, the most powerful concept in trading is liquidity. Because if you understand where liquidity exists, you start understanding where the big players want price to move. And that changes everything. Apart from liquidity, these are the main concepts I would focus on if I restarted trading again. Support and resistance, trend lines, market structure, volume and momentum, and most importantly, risk management. That's it. Simple. No unnecessary complexity. Most profitable traders make money because they master simple things deeply. Now, once you understand these concepts, the next step is building your own strategy. Every strategy should answer some basic questions. Which market will I trade? Which instrument will I trade? What time frame will I trade? What is my entry condition? What is my stop loss? What is my target? And how much risk will I take or trade? Everything should be predefined because professional trading is not gambling. Professional trading is decision making with rules. Now here comes the stage that most beginners completely ignore, backtesting. This step alone separates gamblers from real traders. Most people put real money into the market without even knowing if their strategy actually works or not. Think about how crazy that sounds. It's like driving a car at full speed without learning the brakes first. Backtesting simply means testing your strategy on old charts. You go back to previous market data and check whether your strategy would have worked consistently or not. And during backtesting, you discover something very important. You discover your weaknesses. Maybe your strategy loses during certain hours, maybe it fails during news events, or maybe specific setups are causing most of your losses. And once you identify these problems, you remove them. That is how strategies improve. Now remember this carefully. If your backtesting win rate is around 75 to 80%, then in live market conditions it may drop because real emotions enter the game. Fear, greed, impatience, and overconfidence. That is why psychology becomes such a massive part of trading success. Now after backtesting, do not jump immediately into live trading. First use a demo account. Practice placing trades, practice execution, and practice following your rules. Because knowing a strategy and executing a strategy are two completely different things. And only after becoming comfortable should you move to real money. Start small, very small. Because your first goal as a beginner is not making money. Your first goal is survival. If you survive long enough in trading, you eventually improve. But most beginners blow their accounts before they even gain experience. And that is why patience matters more than excitement. Trading is not a sprint, it is a long-term skill. And trust me, if you stay disciplined, focus on risk management, and continue improving step by step, trading can completely change your financial future. I hope this video gave you clarity. I hope this roadmap helped you understand what actually matters in trading and what doesn't. And if you learned something valuable from this video, make sure to subscribe because on this channel, we talk about real trading, real psychology, and real growth. I'll see you in the next one. Thank you.